Let's talk about something that trips up even the savviest investors: behavioral bias. These are the sneaky little habits our brains fall into that can sabotage our investment decisions. I'm Brian Cain, financial advisor and co-founder of Viribus Wealth Management Partners, and I have 25 years experience in the finance industry. Through those years, I've seen all of these biases come into play at some point or another. Let's talk about it. First up, overconfidence bias. This is when we think we're smarter than we actually are, or that we can predict the market better than the pros. Have you ever met someone who brags about picking a winning stock only to ignore all of the times they lost big? That's overconfidence at play. It can lead us to take on too much risk or trade too often, racking up potential fees and losses. If you think you might be doing this, ask yourself, am I basing this decision on facts or just a gut feeling? A great way to potentially avoid overconfidence bias is to stick to a disciplined strategy. Set clear rules for when you'll buy or sell, and don't let your ego override them. And hey, consider diversifying your portfolio. It can help insulate your portfolio for when your sure thing isn't so sure. Next up is loss aversion. This is when we feel the pain of losing money way more than the joy of making it. Studies show losses hit us twice as hard emotionally. So, what do? We hold on to losing investments way too long, hoping they'll bounce back, or we avoid selling because locking in that loss just feels unbearable. Here's how to spot loss aversion. Are you refusing to sell a stock just because you don't want to admit it's a dud? To avoid this trap, consider setting stop-loss orders, automatic triggers to sell if a stock drops past a certain point. Also, zoom out and look at the whole portfolio. One loss shouldn't be the end of the world if your overall plan is solid. Have you ever heard of herd mentality? This is another common mistake. It's when we follow the crowd because, well, everyone else is doing it, so it must be right? Think of the crypto craze or meme stock frenzies. The problem? By the time the herd piles in, the opportunity might already be gone, or worse, you're buying at the peak. You can notice if you're following herd mentality by asking, am I investing because I've researched this or just because it's trending on social media? To steer clear, do your homework. Look at the fundamentals, earnings, growth, debt, not just the hype, and consider contrarian moves. Sometimes the best opportunities are where the crowd isn't looking. We are 3 possible mistakes in. Number 4 is confirmation bias. We know we love being right, so we seek out info that backs up what we already think and ignore the red flags. Say you're bullish on a company. You might focus on their shiny new product launch or gloss over the rising debt or legal troubles. Try to avoid this by spot checking yourself. Am I only reading the good news? Force yourself to play devil's advocate. Actively look for reasons that your investment might fail. I like to keep a pros and cons list for every big decision. It keeps me honest and grounded. The final behavioral bias mistake is recency bias. This is when we put too much weight on what's happened lately. If the market's been soaring, we assume it'll keep going forever. If it crashes, we panic and think it's doomed. But markets don't work that way. They're cyclical. Ask yourself, am I reacting to last week instead of the long term? To help avoid this, stick to your investment horizon. If you're in it for 10 years, don't sweat a 1-month blip. Review your goals regularly and let data, not emotions, guide you. How do we tie this all together? Behavioral biases are part of being human, but they don't have to derail your wealth planning. Here's my 3-step game plan. 1, pause and reflect. Before any big move, take a breath and question your motives. 2, lean on systems. Use tools like diversification, stop losses, and written plans to help take the emotion out of the equation. And 3, get a second opinion. Talk to a trusted advisor or a friend, someone who will challenge your thinking. Investing is as much about mastering your mind as it is about picking stocks. Spot those biases, adjust, and you'll be ahead of the game. That's it for today, folks. If you found this helpful, drop a like and subscribe. And until then, happy and smart investing.